Welcome to Hybiz News. The trade war fallout of the iPhone maker says China's days as a factory to the world are over. A key supplier to Apple and a dozen other tech giants plans to split its supply chain between the Chinese market and the US markets, declaring that China's time as a factory to the world is finished because of the trade war. Honhai Precision Industry Company Chairman Young Liu said it's gradually adding more capacity outside China, the main base of production for gadgets from iPhones to Dell laptops and desktops to Nintendo Switches. The proportion outside the country is now at 30%, up from 25% last June. The ratio will rise as the company known as Foxconn moves more manufacturing to Southeast Asia and other regions to avoid escalating tariffs on the Chinese-made goods headed for US markets. Liu told the reporters that after his company reported its financial results that its intensifying trade tensions between Washington and Beijing have pushed the device manufacturers to diversify their production bases away from China. And Liu last year said that Apple's most prized product, the iPhone, can be made outside China if needed. The two nations remain in trade talks, but Liu's comments affirm a growing expectation that the China-centric electronic supply chain will fragment over the longer term. The Taiwanese company reported better than expected net income at about 22.9 billion, that is about 778 million for the quarter ended June, boosted by increased demand from iPads and MacBooks. Revenue was at about 1.13 trillion, but Honhai warned that expect its third quarter results will be down by double digits relative to 2019 as Apple delays its iPhone launch this year. Honhai is bouncing back from a record profit slump in the first quarter production as its factories recovered and shelter-in-place orders spurred the demand for home computing equipment. The pandemic likely boosted the iPad and Mac sales even as Apple store closures weighed in on iPhone sales. Apple CEO Tim Cook said that on 31st July, after reporting the quarterly revenue that crushed estimates, Apple accounts for half of Honhai's sales. Even Apple outperformed. Honhai's other customers have fared less well. Hong Kong listed subsidiary FIH Mobile Limited said that its August 7th earnings release that while Huawei Technologies company's new phones have been popular in China, they missed expectations elsewhere following the US sanctions. Another key customer, Xiaomi Corp, suffered a backlash in the Indian market amid growing tension between China and India. FIH lost about 100 million in the first year. Foxconn has been shaking up its traditionally China-focused operations. Honhai is among the Apple's assembly partners that plan to expand its operations in India, potentially helping the iPhone maker grow its presence in the country of 1.3 billion people and shift some of the US company's supply chain outside of China as ties between Washington and Beijing fray. Foxconn will work on its component business to maintain tech leadership, and it also benefit from its long-term relationship with Apple. In response to several analysts' questions about Foxconn's competitive strategy, Liu said that the rising Chinese supply orders could be further affected after President Donald Trump issued an executive order barring US residents from doing business with Tencent Holdings Limited WeChat. Annual iPhone shipments could plunge by about 25 to 30% if Apple is forced to remove the app from its app stores worldwide. TF International Security Analyst Kuo Meng warned in August 9th note. Thank you for watching.